Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's consider the situation on the gold market again. So despite all geopolitical tensions, gold also was not able to resist the statement from the Fed. As you've heard probably that Jerome Powell said that inflation is getting even worse, and it was in December, and he confirmed that that Fed intends to raise rate in March. So that's actually has become the big boost for United States dollar and United States treasuries. As you can see, interest rate starts rising again, dollar starts rising again as well. So, and that has pressed on all dollar rivals and the gold in particular. At the same time, with a bit, yes, gold market was not able to hold the short-term bullish context. As we said, market has to stay above 1837, 1835 support. From that standpoint, our indicative level has worked perfect. Once it has been broken, it's just was clear that gold market intends to call our still in a bit longer term perspective, the 1750 lows remains as major indication of the bullish context. So these lows still stands valid, and they are important from a bit longer term perspective. Once market will break it down, in this case we could start thinking about the challenging of the previous lows and the developing of the bearish trend. In this case it will be clear. But while market stands above the 1750 on the longer term scale with the weekly chart, it still keep chances on the upward continuation. Currently, whether we would like or not, but again, bulls have to turn into watch and see mode. So it's just monitoring how market responds to the major support areas, what patterns market is forming. Once we will get something bullish, we could consider taking the long position. But currently, it's still time to watch and to monitor the overall situation. Bears could consider some intraday patterns that might be used for possible trading. For example, so on the daily chart, we see that trend has turned bearish. On the 4-hour time frame chart, market was able to complete just the minimum target of our reverse head and shoulders pattern, as we said. I say BCD pattern. It was completed 1851 OP, ABC bottom deep action forming minor butterfly and collapses fold. Now market stands at the support. So take a look that market hits the confluence 1809, 1850. And that's the first area that market that bulls could keep an eye on. What will happen around it? Personally, well, I'm not really have a lot of hopes around this area. So maybe bounce we will get some, but hardly it becomes the sharp upward reversal, because it is too fresh statement from the Fed, and a lot of investors suggest that Fed could take a bit faster pace, maybe not even with the interest rates change, but with the quantitative tightening. So they could increase amount of the bonds that they withdraw from its balance sheet, which also will be negative for interest rates, and just keep going higher, and negative for the gold market. That's why more probable than here we will get some just bounce and downside continuation should happen. So some rest of this momentum probably should also could come on the market. From that standpoint, I think that the bears, if you're trading it, generally would like to take the short position, you could consider a few patterns. First of all, as you can see, a classical approach tells us that this might be the head and shoulders, right? So left shoulder, head, and market could show the bounce up to form the right arm. That's potentially interesting for taking the short position, especially if we will get kind of the Gartler's triple to sell or something around this area. So approximately this should be an area of 24, 26. That's an area where market should show some response and to form something. Scalp traders could consider possible some brand body trades, for example. We have good thrust. For these thrust purposes, you need to take a look a bit different level, not the 26, but 24. 2450 is just because this is the 30% level directly of the thrust action. So once market will show the bounce up to this area, this might be the bread and butter sell, you could consider taking the short position of the minor bounce. This is also the solution that you could consider. Bulls, instead, since market stand at the confluence support, as I said, you could keep an eye and keep watching for some pattern that could trigger the upward bounce. This I mean not the bulls who intend to buy on the daily chart, but those who intend to trade on intraday charts. For example, if you drop time to the 50-minute chart, you probably could try to catch your kind of the head and shoulders as well, right? So if market will complete the bread and butter, shows downside action, reaching the target of the bread and butter trades will be 618 support, that could become the part of the greater pattern, such as say it could be the bullish head and shoulders. So lots of opportunity stands on intraday charts. So it's a few patterns might be formed that you could keep an eye on. But speaking on the longer term perspective, on the daily chart in particular, it seems that this downside action might be a bit more extended, and things that we see currently, it might be just a temporal pause in our prediction because of the strong support area. Anyway, before taking a long position, we should get good confirmation. So the confluence support is not enough. As a bullish context, we need to get some clear bullish patterns on intraday charts that might suggest that market is reversing up. So I think that we need to wait a bit for this. Hardly we'll get it right here.